we don't necessarily want to think about the end, right? But the reality is that the business will transfer, right? We're not going to be around forever. You're not going to be able to run business forever. The business will transfer to someone. And if you wait until something happens, like, you're burnt out, there's family issues, whatever else that forces your decision to sell, then you're not necessarily going to get the best outcomes. Most times the best outcomes come from years of focusing on improving the saleability and transferability of the business.
Hello, and welcome to the Elevator Careers Podcast, sponsored by the Allred Group. I am your host, Matt Allred. Does your workforce need a lift? At the Allred Group, we are committed to connecting your company with top talent that matches your needs. Give us a call at 404-890-0445. Today's guest is Jessica Hellman, a business advisor specializing in mergers and acquisitions with Lift Advisors, Inc. With a background in applied mathematics and data analysis, Jessica has helped business owners understand what drives value, growth, and successful transitions. In this episode, we discuss private equity, business valuation, trust, and the steps owners can take to build a stronger company. Jessica, welcome to the show.
Thanks, Matt. Thanks for having me.
No, I appreciate you being here. I enjoyed your presentation at the last NAEC conference in Long Beach, and talking with you a little bit about what you do and what you were talking about. Not only is it fascinating to me, I thought it'd be fun to have you here. Even though I think you'd rather cuddle up with a spreadsheet than do this, I appreciate you being here.
Yeah, that's right. I am 100% introvert, right? I would rather be dealing with spreadsheets than doing something like this, or even speaking. That was very, very difficult for me. I stressed out about that for a long time before, but ultimately it went well. So I'm hoping to kind of take that confidence into the next one and to this this as well. Yeah,
absolutely. Well, you're not the only one that gets nervous. Honestly, I get nervous a little bit myself, and honestly, when I was interviewed for my own podcast last fall on our 100th episode, I realized that, this is a little bit harder than I realized, right? It's easy to ask the questions, but it's a little harder to be on the hot seat. So you're not the only one. So you told me you didn't really start in the industry. You started in applied math and data analysis, which makes total sense. What kind of pulled you into elevators?
Yeah. So, you're right. I did not start in the elevator industry. My background is in math. I have a, master's in applied math. And my first job out of college was at a company called Urban Science. I won't get into too many details about what they do, but they're focused in the automotive sector, a lot of marketing. My role there was in supporting some of their expert witnesses, right? Building testimony, litigation related analysis. So when I was there, really, really heavy focus on data analysis, on, building a story that, the experts could take to court. And, overall, just a really, it was a really great company, really great experience. I worked with a lot of really great people there. But my brother, right, who is, an engineering major, he worked at a few elevator businesses, Otis, Millar and Schindler, before branching off and starting his own business along with three other partners, right? That was City Elevator in New York. They grew that business to be pretty big, over 1,000 units on maintenance, 750,000 or so in monthly maintenance revenue. So it was a good sized business. He, along with the three partners, and I, if you've got partners, I think you understand this, or even it applies to spouses, right? Sometimes things are difficult. It doesn't always go
Sure.
like you planned, right? And so his goal was to get an investor in to help buy out some of the partners and to continue on with the business. And he really started building a team. He brought in a lot of really good people, a lot of really experienced folks, names that are recognized kind of in the New York market, right? But he needed someone kind of on the analysis side, right? He wanted to professionalize some things. He wanted to...
Well, especially if he's going to sell, right? He needed a different set of eyes that would be really looking at it like your expertise is analysis, right? So somebody who's going to be analytical and not just...
Right.
I guess the other side of that would be kind of emotionally involved to the point, no, no, this is worth X million dollars. And the analyst is saying, no, look at the numbers.
Yeah. No, that's absolutely true. That's definitely something that, comes up a lot in M&A. I'm sure we'll talk about that, kind of as we go along. But yeah, I mean, for a while I said, I'm kind of doing my own thing. Like I'm not 100%, I don't know about elevators. But eventually I came over, like you're saying, with the goal of let's put some things in place so that the business sells.
What motivated you to go that way? Because it sounds like it's very foreign, very different, and depending on how much you like your brother, that can be really risky.
I think that's the thing, right? There's some level of loyalty there and trust,
Sure,
right? I trusted him enough in order
sure,
to do it.
sure.
That's really what it is. So I mean, not planned for sure. I did
Right.
not think at any point that I wanted to get into the elevator industry. But I mean, once I got here, I was like, wow, this is pretty great, you know?
What surprised you the most about showing up? I mean, obviously you had expectations, you'd heard some things from him, but once you kind of walked in there, what was the biggest surprise for you?
Yeah, I mean, I think, well, a couple of things I would say. There was more overlap than I would have expected from the automotive industry, if you can believe that,
Okay.
right? There were, if you think about like an auto dealer, right? And this comes from my experience at Urban Science. Those dealers are not in the market to necessarily sell new vehicles, right? They sell new vehicles as a way to get warranty work, to get service work. There's a lot of carrying costs on a new car, and they don't make a lot of
So
money
you
on it,
sell them
right?
at cost and then you get the maintenance is what I'm hearing.
And then you get the maintenance afterwards, right? So it's a very similar thing. I really didn't expect that, but it was kind of a unique thing. I would say the relationships, the strength of the relationships, the importance of the relationships is also something like kind of same, but a little bit different as well. So I mean, coming in coming into the business, as the sister, right?
Sure.
There were, I think, not high expectations of, right, what I was gonna bring. This is like people thinking, "Okay, well, somebody else taking up a chair."
Well, and the
You know
question, she's not going to turn wrenches. Like, what value is there
Right.
in sitting behind a desk and working on a computer, right? And maybe just not understanding what's even possible.
Right, right. And I mean, coming in there, as the kind of as the sister with, I think, low expectations, I really wanted to prove those folks wrong,
Sure,
right? And the fact that there was some overlap, when I got there, I was thinking like, okay, yeah, there is value I can add here. I can immediately start tackling these things.
very cool. How long did it take, just for them to start to see, oh, she actually is bringing value?
Well, I mean, I think for the first few months, I didn't have a desk, right?
That's tricky,
So, I kinda sat in a corner, right? I'm not sure that anybody knew what I was there for, what I
right?
was doing. So, once I was able to, like, get out and meet folks and really start digging into some of the projects I was doing and, making suggestions about how we should do things, I think, um, it quickly turned around. I mean, at the same time, I was asking people to do things different than what they had normally done,
Sure.
right? As a part of this process and implementing the service plan and trying to make some processes more professional, right? It required a certain level of change. So I wouldn't necessarily say that I made a ton of friends immediately, right?
Sure.
That trust built, that built over time for
Yeah,
sure.
yeah, yeah. Well, and especially if you're trying to operationalize and help create or better define a maintenance program or billing or margins or there's some discipline in there that may not be fun if you're used to just kind of this is just how we do things and why do I have to log this why do I have to return my tickets why do I have to follow this process that can be really uncomfortable for somebody who's just maybe not disciplined enough to do it or to care.
Yeah. Yeah, exactly. But I mean, the reality, like on the operations side, is that everyone really is part of the process and the team, right? Being able to fix elevators is the most important part, right? But all of it together combined. is what makes it successful. One of the projects that I worked on at the very beginning was this dedicated service solution. The goal was, let's get every single maintenance contract up at, 35% gross margin, which is a high target. But that required not only working with the service department to make sure that task lists are correct, dispatch is correct, right? But then you're working with sales in order to understand what contracts say, what they should say, accounting. And I mean, that one project touched so many different departments, right,
Yeah, everybody.
in the business that, it just, it really is amazing, I think, in our industry, how tight the team needs to be in order for everyone to be successful. You know what I mean?
Absolutely. Yeah, well, and you've kind of hit a couple things there. I guess one question I wanted to ask is you were bringing some transferable knowledge and skills from your other job. Were there some things that were unique to elevators that actually make them not just run well, but it's one thing to run well, but it's another thing to be able to convey that to a potential investor, right? They have to be able to see it. So, and if you can't prove it, then it's not there. Anyway, that's a convoluted question for you.
Well, I mean, I think, we talked a little bit about the relationships. Definitely one of the things I was working on was like, how do we quantify these things in order to position the business correctly, to point out all of the important parts, right? The recurring revenue, the contracts, and all of those things. A lot of which is what I do now at Lyft Business Advisors, right? In selling, in working through transactions and in valuations, right? So that was a big part of it for sure. Yeah.
Yeah, yeah. How much, I mean, obviously you saw partner dynamics. You mentioned that kind of right at the beginning, right? So you saw some internal challenges. How much would you say people and relationships impact the success or failure of the business?
I think this is key, right? Having worked on the operations side, I mean, a lot of businesses are relationship driven. Elevators are no different, but I think the difference with elevator companies is that there's a ton of pressure all the time, right? You've got service issues and callbacks, and then you've got, demanding customers that don't want to pay in a reasonable amount of time, making payroll, running around trying to get checks. There's a ton of pressure every day. And the relationships then, if they're not strong, kind of the smaller things I think become much, much bigger, right? So you've really got to have a level of trust. I think I've said trust. That might be the theme of, of my
Yeah, yeah,
podcast, right? Is trust, right? There's got to be a strong level of trust between employer and employees in order to handle that level of pressure. The same lesson also applies in M&A, right? When it comes to trust, I think if a deal doesn't happen, if it breaks down for any reason, it's often because there's a lack of trust from, one side or the other, whether it's buyer and seller or buyer and advisor. Trust is the key.
yeah, absolutely. Well, and especially if you're there kind of on a long-term project and things are changing and people aren't liking it, it's like, do I trust that she's trying to move this in the same direction I am or not? Or, are the
Right.
owners trying to take it in a direction that may not work out well for, somebody else, right? Because everybody's kind of got their own interests at heart and want to make sure
Right.
that they're moving in a direction that's going to work for them.
Yes. Yeah.
Yeah.
And that can be, very scary around, a transaction. A lot of times the circle of trust, right, is very small
Hmm.
because you don't necessarily want people deciding that something is good or bad for them. Like, I have never worked with a seller that did not have their employees' best interests in mind, like, never. It always comes up, like, I wanna make sure my employees are taken care of, right? But, folks are scared, like, that's their livelihood, right? And they don't wanna necessarily have to, change jobs or whatever. But, yeah, it's the sellers that we've worked with have always been focused on good outcomes for the employees and, right.
Yeah. Yeah. Thank you. Hey there, listeners. It's Matt, and I would love to know what you want to hear more of on the podcast. If you have a topic in mind or a guest you'd like to hear from, head over to elevatorcareers.net and drop a suggestion in the box, or you can email podcast@elevatorcareers.net. The link will also be in the description below. Thank you so much for being part of this conversation. Now, back to the show. One thing I want to ask you about a little bit. I mean, it seems like your brother was talking about, the recurring revenue and the structure, maybe even before a lot of others were seeing the importance of that. And I'm curious what you think he saw early that maybe the market just hadn't responded to at the time.
Yeah, I mean, I think he definitely, he understood what was attractive about the elevator business,
Hmm.
right? The things that we hear PE kind of repeat over and over
Sure,
again,
they've
right?
learned the line now.
They know it. The recurring maintenance revenue that's contract based, it's an essential service, a fragmented market, right? He saw, all of those things. And I don't think that those are necessarily new. For him, the timing just wasn't right on the PE
Do you
side.
think it was the market? Do you think that maybe the PE overall just didn't kind of understand the value? What was it? Do you think that was kind of off?
Well, yeah, I mean, I think the timing for them now, just just to say, like, PE has been in the elevator industry for a while,
Sure.
right? There's been, going back to the early 2000s, there was a company, Jordan Industries, that bought a business long elevator that was then sold to Kone. If we think about Oracle's, transition, they were PE backed early on, and then they sold, I think, to two subsequent groups. So PE interest is definitely not new in the industry. I think kind of what is different and what wasn't there is, I think the changes are more private equity themselves. I think there's more money there now, right? There's more money in fewer deals, more willingness to look at, you know, different industries. And I think those investors are kind of catching up to what we already know about the industry. There's also now a history of successful entries and exits, right? So other PE groups are looking at it like, "Oh, okay, so this is possible, it happens, and folks are making good money." So, I think that's the difference in timing. It just wasn't there. I mean, there was some PE, but not like it is, and that's really what I think it is, a change in PE more so than a change in the
Sure.
elevator
Sure.
industry.
Well, and depending on what, 20 something years ago, I remember there was a lot of PE and buying houses and buying, so maybe it's a certain trend, right? When the market tanks, well, then that money goes away and it starts looking elsewhere to invest. And so maybe it's just a season, as it were, of where to
It's a se
invest.
and, a lot of the PE groups that we hear from, they're all kind of chasing the same investments. I'm not sure why that is necessarily, but, it's like it's roofing or it's landscaping or it's, or and elevators. I think the one thing that we maybe have going for or against us, right, is that we're still a small industry compared to a lot of others. If you think about roofing and how many houses there are, right, it's a huge market. Or lawns, right, lots of lawns to mow market, not a whole lot of elevators by comparison, right? So the industry is still a little small. The fragmentation in the market creates businesses that are just a little bit smaller than they're willing to look at, I think, in a lot of cases. But, I mean, still, there's a ton of PE interest. Sellers are hearing from different groups almost daily. We hear from different groups almost daily to the point where, it's hard to take a meeting from everybody because that's kind of all you would be doing.
Yeah, yeah, yeah. One thing that surprised me 5, 6 years ago, I started getting calls as a recruiter, right? But from investment firms, and it happened a couple times, and they were like, "Hey, you're talking to a lot of these elevator people. Do you know anybody that wants to sell?" I'm like, "Yeah, I don't even ask that question, right? That's just not even my, I wouldn't even think to ask that." But then they
Right.
would say, "Well, if you can bring somebody and they want to sell, we'll give you a cut." And I'm like, "Huh, that's interesting." So
Yeah.
I did make a couple calls, and I got some. Obviously, people are going to be tight-lipped, and they wouldn't have told me anyway, right? But it was interesting to kind of see a few of them that I had asked about, right, later sell, and I'm sure they had relationships, and kind of to my first impression, I didn't really belong there anyway. But it was interesting to me that I would get phone calls like that. Hey, help me find somebody to buy. I'm like, oh,
Yeah.
okay.
Yeah, no, I mean, and, there's all sorts of, like, finder firms too that are
Sure,
working on behalf of these groups, and so, we see from sellers, in the South or, in the Northeast being targeted by businesses that are primarily in the South, and,
sure.
it's kind of a blanket everybody that has elevator in their name, right? And let's see what comes out of it.
Yeah, yeah, and it really has only happened in the last few years. I mean, for the first 10 years or so that I worked in this elevator industry, I just didn't hear anything about that, and then it seemed like it really kinda hit hard 5, 6
Mhm.
years ago. So, I guess from your perspective, what actually makes a company attractive to a buyer? Whether it's PE or a major OEM, what is it that they're really after?
Yeah, I mean, just like all investors in all industries, right? They are looking for profitable businesses of a reasonable size that are easily transferable and provide limited amounts of risk to them.
So tell me, what is it about the elevator industry businesses that fit that criteria? The limited
Yeah.
risk, the easily transferable, all of that?
So it's a lot of the things that we talked about. It's the recurring revenue for maintenance contracts, and it's additional revenue generated from those maintenance contracts,
Mhm.
like repair and billable
Sure.
extras, right? It's the fact that those things are tied to long-term contracts. Maintenance and those things are that are code mandated. Like, those are all of the things that create kind of that recurring revenue that decrease risk. Some of the other factors that, a buyer might look at when they're thinking about, like, how am I going to if I'm acquiring this business, how am I going to integrate it, right? They're looking at more kind of the operations side. What kind of systems are they using? If the owner is, let's say, looking to retire, is there somebody else that's going to step up? P might focus more on, is this business potential platform versus is it an add-on, something I can scale? Strategics, OEMs looking more like on geography, unit types, right? Is there potential for modernization where they can put their equipment? But I think overall the foundation is the same. Is the revenue and the profit going to continue? Is this a business I can, like, easily acquire and integrate? And are there strong people there?
Right, right. Yeah, if you've got strong people and if you've got, long-term contracts, then it certainly smooths that, the transition because you've got years perhaps to even build or upgrade the team before those contracts, so that they're gonna keep paying money. So yeah, I'm curious. I mean, obviously you're involved kind of end to end with acquisitions and what does that process look like kind of behind the scenes that most people would never see?
Right, so, I mean, there's a lot more to it than just, like, find a buyer and agree on what the price is gonna be, right?
Mhm.
I I think sometimes I'm a little surprised when I hear folks kinda going it alone, right? Sellers selling without representation, because there are so many ways that you can get tripped up
Sure.
that end up costing money.
Well, I'm sure you've seen that, right? I imagine you've kind of come in and oh, hey, we've been working on this deal for a while. We're about to sign it, but we want you to look at it, and then you can say, oh, if you were to fix this, 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 you could sell it for twice as much or something like that.
Yeah. Yeah, no, I'm definitely we come across that. There is a lot that happens behind the scenes, getting the information together. Due diligence is a big process in itself. Keeping the momentum going during diligence
Yeah,
is a big thing
you've
that a
still got
lot
to
of people.
fix elevators, is what you're telling me, right? You can't just
Yeah, like, you've gotta run the business, and you're responding to all of these data requests, right?
right,
And it's a lot, and sometimes it helps to have somebody, there helping keep the momentum going. I think this point also, I think it's back to, like, what we were talking about with trust, right? Jeff Eaton, who's the owner of Lyft Business Advisors, he gave a presentation at the spring conference, right? He did the keynote address, and he talked a lot about, like, mutual trust, and that really, trust and honesty, that's the key to getting deals done. Because, like, if you think about it, you can't account for every single contingency, right? If you spent the time trying to build a purchase agreement around everything that could go wrong, I don't know that you would ever get done, and you probably would spend most of your proceeds on legal, right?
Yeah,
Which you
yeah,
you don't
yeah,
do. So, it becomes like a leap of faith almost,
for
right?
sure. Yeah,
Both sides, there's gotta be enough trust there in order to move forward because you can't document, you
yeah.
can't mitigate the
Well,
risk
and to your
through.
point, right? You can do a bunch of due diligence, but at the end of the day, you have to do your best guess and say yay or nay. I trust this person, this organization, this company. I think it's going to be a
Mhm.
good thing,
Yep.
or this just doesn't feel right, and we're going to have to walk away, even though it may be hard to do so. Yeah. Yeah, that's a good point. So, what would you say are the biggest drivers? What are the biggest, when it comes to valuation, and maybe what are the biggest mistakes that owners do that kind of hurts their value?
Yeah. So just like very generally,
Hmm.
right? The value of the business is some multiple on the profitability. The question is, what is the multiple? That's really, that's where the value lies. What's the multiple? How long does it take the buyer to pay off the investment? So things that influence the multiple, generally the size of the business. Bigger businesses tend to get a premium. And then all of the things that we've talked about, the recurring revenue, maintenance contracts, all of those things, margins, and then certain like buyer factors, right? They want to be in a market, there's good synergy there, good management, things like that. I guess mistakes, one business multiple does not apply to another business, right? So there's stories about, oh, so and so sold for, 10 times. Okay. Well, that could have been a huge business somewhere, right? That doesn't necessarily mean that the 10 times multiple applies to your business. I think the second thing is, focusing solely on monthly maintenance revenue. I think historically, right, we've talked about valuation of businesses as a multiple on MMR, but the reality is the profitability is the most important part. If you think about it, like you could have two businesses with, $100,000 in monthly maintenance revenue, but maybe one is, focused on oil and grease contracts and they do a lot of extra billing that's more profitable than, $100,000 in full maintenance where everything's covered, right? So it's the same MMR, but much different businesses, much different outcomes in terms of profitability. So focusing solely on MMR to value the business is the focus should really be on the profitability.
Sure, sure. Yeah, I mean, if you've got costs that are eating up your margin, well, then you really don't have anything to sell.
Right. If you've got 100,000 in maintenance, but you've sold it at, 5% margin, then that's not as valuable as somebody who is really at, let's say 35% margin. It's just not the same.
Yeah, absolutely. Yeah. So I've got a couple questions for you before we wrap up, and one is just maybe someone's listening and they're saying, this is a really interesting career path. How would you break down, actually getting into M&A? Certainly on the elevator stuff, but it's such a small niche, right? I can't see a person going to college and say, "Oh, I'm going to do elevator M&As." But what advice would you give in that regard?
Yeah. I mean, I don't think that it would necessarily be that difficult to get into on the elevator side. Like, feel free to give me a call if you think that
Right on.
you'd be good at it, right? But I do think that to be good at it, to be like the best at it for the person selling their business, you've got to have kind of the operational knowledge, right? A lot of times we'll get questions from buyers on, certain things, and just having worked and having done that job, right? These are questions that I already know the answers to. I don't need to go back and bother a seller with who is trying to run the business at the same time. Where we have the answers. It just, I think it helps you just assist sellers kind of along the way. I mean, like we talked about, my path was a little bit unconventional, but the operational experience I think really, really helps in trying to make life easier for sellers. And I mean, relationships also matter. I think the industry is small. It's good to know folks, ask questions, talk to as many sellers as possible, just but really understand the day-to-day realities of folks.
Yeah. Yeah. No, well spoken. So, last question for you. I mean, if there's one message you could get in front of every elevator business owner listening, what would it be?
Okay, this one is start preparing earlier than you think you need to. We don't necessarily want to think about the end, right? But the reality is that the business will transfer, right? We're not going to be around forever. You're not going to be able to run business forever. The business will transfer to someone, and if you wait until something happens, like, you're burnt out, there's family issues, whatever else that forces your decision to sell, then you're not necessarily going to get the best outcomes. Most times the best outcomes come from years of focusing on, improving the saleability and the transferability of the business. So things like making sure your financials are straight. You've got contracts, right? You've got copies of your contracts, right? They're all executed and valid. You're working on diversifying your customer base, making sure that you've got a good team. The important part of this is that, the things that make a business more saleable or transferable are also the things that make the business more profitable in the meantime. So it's like it's 2 for 1, right? Like you have a better outcome when you sell, and a more profitable business in the meantime. And I think, just planning in advance, making sure that you're focused on the saleability, the elements that make the business more saleable also means that at the end you have more options, right?
For
Which
sure.
also makes the business more valuable. There's PE deals and OEM deals, other strategics, maybe the employees buy the business, or if the business is strong and it's transferable, then you've got options and that helps also expand your value.
Yeah, no, very well said. I mean, what I'm hearing is, I think it was Stephen R. Covey that used to say, begin with the end in mind, right? There is going to be an end, whether you pass away or whether you sell it or whether you give it to your kids or you sell it to your employees. If you look to that and kind of focus on having the healthiest business you can, you'll be better off.
Hmm. Yep, absolutely.
Awesome. Well, Jessica, thank you for being with me today. I've enjoyed it. I appreciate your insights and wish you the very best as you continue to build your business.
Thank you, Matt. Appreciate it.
Thank you for listening to the Elevator Careers podcast, sponsored by the Allred Group, a leader in elevator industry recruiting. Please visit our YouTube channel at Elevator Careers or check us out online at elevatorcareers.net. Please like and subscribe, and until next time, stay safe.